Hey there, and welcome to L. Harris Media. If you're new to investing and want to understand how the stock market works, you're in the right place. Today, we're going to break down the basics of stocks in a way that's simple and easy to understand. Whether you are looking to grow your wealth or you are just curious about the market, stick around because by the end of this video, you'll have a solid understanding of what stocks are, how they work, and why they could be a smart investment for you. To start off, what exactly is a stock? At its core, a stock represents ownership in a company. Think of it like this. A company is like a pie, and when you buy a stock, you're buying a small slice of that pie. That slice or share gives you a claim on the company's assets and earnings. The more shares you own, then the bigger your slice of the company. You might have heard about people owning shares of stock in companies like Apple or Amazon. When you own a stock, you're essentially a part owner of that company, even if it's a tiny fraction. Pretty cool, right? Now let's take a look at how stocks actually work. Stocks are bought and sold on stock exchanges like the New York Stock Exchange or NASDAQ. Additionally, the price of a stock is constantly changing based on supply and demand. So if more people want to buy a stock than sell it, the price goes up. If more people are selling, the price goes down. Now that we know why prices rise and fall, you may be wondering why stock prices change so frequently. Well, the answer is that stock prices move based on many factors, including the company's performance, news about the industry, or even what's going on in the global economy. For example, if a company releases a popular new product, its stock price might rise because investors believe the company will make more money in the future. Next, let's talk about different types of stocks. The most common types of stocks are common stock and preferred stock. Common stock is more frequently purchased than preferred stock. When you own common stock, you typically receive voting rights in shareholder meetings, and a share of the profits in the form of dividends. However, there's a catch. If the company goes bankrupt, common stockholders are last in line to get paid. Preferred stock, on the other hand, is a little different. Preferred stock usually doesn't come with voting rights. However, preferred stockholders get paid dividends before common stockholders. And if the company goes bankrupt, they're paid out first. Now you may be wondering, why should I invest in stocks? Well, historically, stocks have been one of the best ways to grow your wealth over time. Over the long run, the stock market tends to go up. Of course, there will be ups and downs in the short term, but patient investors who hold on to their stocks tend to see good returns. Additionally, when compared to other common investment vehicles, such as bonds or savings accounts, stocks typically offer better returns over the long term. But remember, with higher returns comes higher risk. As a result, it is important to remember that stock prices can be volatile, and there's always the chance you could lose money, especially in the short term. Next, let's discuss how someone can buy and sell stocks. Many people find this process to be intimidating. However, it is actually easier today than ever before. You don't need a fancy broker. In fact, all you need is a smartphone and a trading app. For example, apps such as Robinhood and E-Trade allow you to buy and sell stocks with just a few taps. It's as simple as opening an account, depositing some money, and choosing which stocks you want to buy. To wrap up this lesson, let's go over a few key terms to know before you jump into the stock market. First, the term bull market is a term you will hear often. This means stock prices are going up and investors are optimistic. Next is the term bear market. This refers to when stock prices are falling and investors are more cautious. Another term you will hear often is dividend. This is a portion of a company's earnings paid out to shareholders. Not all stocks pay dividends, but for those that do, it can be a great way to earn passive income. Last is the term market capitalization, often referred to as simply market cap. This is the total value of all a company's shares of stock. It gives you an idea of how big a company is. While there are many more terms to learn before you become an expert, in this video, we have covered some of the key basics of investing. Now remember, if you're new to investing, don't rush into things. Start slow, do your research, and always remember that investing is a long-term game. If you found this video helpful, make sure to hit that like button, subscribe to the channel, and drop a comment below if you have any questions or feedback. See you in the next video, where we'll dive deeper into the world of finance. Thank you for watching, and happy investing from L. Harris Media.